I say we go into it.
Let's do it. Let's do it. We got some
dive
great
in.
stocks.
Yeah, this is gonna be a juicy one. So fire away.
All right, so I'm going to share my screen. The first thing I want to just pull up here is you can see this is the large cap sector report ranking that we put up, mid cap and small cap. We do this every week just to get a feel for where we should be focusing generally. REITs, healthcare, energy, and utilities. Pretty defensive, actually, Joe. Healthcare has not, though, moved up in large and small cap yet. So again, just something to keep in mind here as you're positioning for the portfolio for the future. So I want to start us off with Revolve Group, Joe. RVLV is the symbol, listeners.
I know it says fashion retailer for millennial and Gen Z, which I am, but I have no idea what the hell this is.
Right. I've never heard of it really until a couple months ago. And, I think that, Joe, maybe after the show is over, you'll be, looking for some new clothes on their website. But
it's worth a look.
We talked a little bit about this in a show a couple of weeks ago that, people getting back out and about means that they're probably going to have to up their game a little bit when it comes to their clothing choices. And that's particularly true, of course, for, millennials and Gen Z who are entering the workforce or early on in their career and are going to be transitioning from.
That's me.
Yeah, right. You'd be transitioning from, being at home and zooming into their classes or whatever, or to work that way back into the office. So, I think, and we have, hey, consumer discretionary income is up and unemployment is low and wages are heading higher. So people have a little extra money to invest in their wardrobe. And apparently, Revolve Group is one place that a lot of investors think that spending is going to head. You've got 22% year over year revenue growth in the March quarter to 179 million, and an expected 25% increase in earnings per share in 2022. If you look at the chart, and listeners, I'll do my best to explain it. If you want, you can also go back to YouTube and look for us on YouTube, Limelight Alpha, Talking Stocks, and you'll be able to look at these charts alongside of us. But Joe, if you look at this chart, you'll see that the stock is breaking out here to new highs, right? Above 60, just cleared out the prior high of 60.89 at the end of May. That pullback here was pretty shallow, Joe. So, you got to 60.89 in late May, and then you pulled back, but you really only pulled back into the bottom of that, I guess, pivot or ideal area that you'd want to accumulate in, which is around $55, $56. And the volume, Joe, like I like to see on those pullbacks.
Yeah, not a lot of sell volume there.
Yeah, not a lot of sell volume. And then look at that move yesterday, Joe, on Thursday with that big above average volume up day that really put it out to that new high. And then today is basically, I would have guessed maybe that it would be down today, just a little bit more of a test of the top end of that pivot, maybe 61. But it's not. It's flatlined as of 12:40 when we're recording this Eastern Standard Time. So it'll be interesting to see where it closes. But I think that this is a stock that I would be focusing my attention on. If you get a 2 to 3% down day, somewhere into that 59 to 61 area, I would take advantage of that. Or if it starts to run away from you, you could also pick it up then. Along the same lines, Joe. And I think maybe we talked about this once before.
I think we have. I used to own this stock.
Stitch Fix has been a weird, wild one.
Yes, it has.
This stock got over to $100 back in January when the meme crowd got a hold of it and sent it quote unquote to the moon, right? And then it's been digesting ever since then. It went from 113 in late January all the way down to 38 in May. Ouch, right? But it has since recovered the 200-day moving average again. And if you notice on the chart, Joe, both the red line, the 50-day moving average, the 21-day moving average, and the 200-day moving average are now all tilting in the right direction. They're all tilting up. And if you look at that big day we had early, probably like June 6th, June 7th, something like that, big up day, big volume. The volume on the sell days, the last few sell days has been pretty low. So I think that the energy is tilted toward upside in this stock. And I would be a buyer actually anywhere in here. So 50, so 60, a little bit below 60. If I can get 60 or a little bit below, I'd be a buyer. Revenue was up 44% year over year in the quarter ending April to 535 million. They still lose money, and that's not too surprising, I suppose, for an e-commerce oriented business. They've got all sorts of shipping costs and other things, and they're probably pretty aggressive on their pricing, Joe, just to try and make sure that, enough people want to stick around and they can reach that magic, point of break in, leverage their revenue against their fixed costs, et cetera. But yeah, I like this setup, Joe. I don't know if you've ever gotten the Stitch Fix. I was talking to a family member the other day. They get it and they like it. And yeah, they return some of the stuff, but other things they do indeed keep and buy. So listeners, if you're a Stitch Fix member and you have any opinions on the service, love to get those in the comments below.
Yeah, I've never used it myself, but I've heard some good things. I've also heard some bad things. One of the things I've heard with a lot of those subscription boxes, we were talking a little bit on Discord this week about Barkbox, which might be going public soon, I've heard.
Yeah, it's public now. It came via a SPAC.
Oh, when did that happen?
So this is a bonus stock, people. A bonus stock.
My goodness, bonus stock. Original Bark company. All right.
Under the Bark brand.
Yeah. So the point is, with a lot of these subscription boxes, and my God, there are a lot of them now. What I hear is that you get the first one and you open it up, and they really try to wow you to keep you coming back for the second one. And then they start to get a little bit disappointing, whether the clothes inside are just kind of bland, or they're from, like Stitch Fix, for example, like they just start giving you like, stuff from Nike and Under Armour and the North Face that you could go and buy at Walmart. So I've heard both sides of that story. Barkbox is an interesting one. My family we have a dog, and we've gotten the bark boxes before, and it's kind of silly, it's kind of whimsical, but the stuff that's in there is really good quality. Like there are bad quality toys that are the kind that our boy downstairs will shred up in a matter of minutes, and then there are the good toys that stick around for years, and they tend to have the ones that stick around for years in those boxes. So that's something I like to keep an eye on with those subscription companies. And I would suggest that you all do the same, because it's one of those things you don't really want to be. Personally, I don't want to be investing in a company that's selling crappy stuff, right?
Yeah, it's got to be quality. And like you said, it's got to continue to wow. So listeners, if you have opinions on either Barkbox or Stitch Fix, please share them in the comments for us so we can get a better feel from social sentiment on what people's opinions are on these. Just looking at the original Bark company, Barkbox, revenue up in the March quarter looks like it grew 79% year over year. This is a SPAC though, and I'm not sure whether or not my system is actually updating with the correct information, so take it with a grain of salt. That being said, looks like a 1.8 billion market cap, which is not crazy considering they did 112 million in revenue. That's like almost a 500 million revenue run rate in that March quarter. Again, I would double check those numbers only because with the SPACs, the new issues and the IPOs, sometimes it takes a little bit for these systems that we use to populate with the right information. All right, pivoting a little bit. Next one is 1-800-Flowers. FLWS is the symbol there. So this screens high for us. And what's interesting, Joe, is it usually screens high for us seasonally around the February time period.
I would think so, yeah.
Makes sense. And then it screens well for us again in the Mother's Day time period, which is kind of, only a few weeks ago. So, I mean, I certainly see that as a potential tailwind for it. And I do recognize there is some seasonality to it. So I was a little bit, maybe I shouldn't mention this one because, I don't want to get too late in that seasonal cycle for it, but I am going to mention it. I decided to mention it because, again, we have the setup that I like where you get that breakout to the pivot point and then you retreat, but the volume on the retreat is really low. So my feeling is that it might be worth taking a stab at it at the 21-day moving average, which is the green light on my chart, which is probably around $33-ish, $34 per share, something like that. Revenue was up 70%, Joe, in Q1 year over year. for 1-800-Flowers. And in 2022, looks like 8% EPS growth is forecasted. So FLWS is the symbol there. Next one, Joe, is one that may or may not already be in your portfolio. It's in a lot of people's portfolios. Amazon.com, AMZN, if you're not aware of the symbol yet. What a beast the stock has absolutely been over the last 20 years. And Joe, we have built a huge, huge channel or base. And theoretically, I mean, the old Wall Street saying is the bigger the base, the higher into space. Right? So we will see, but this reminds me a lot of the setup that we had in an NVIDIA not that long ago, where you had this big base and it tried to rally above it, and then it came back down to the bottom of the channel again, and then boom, it broke out to the upside, and obviously has been a really big winner over the course of the last month or so ago. I think one of the reasons I want to bring this up, Joe, is because they have a very important day coming up.
Yes, Prime Day.
Prime Day.
Which is their kind of own Cyber Monday that they put in June to kind of counteract what I guess are slower sales in the summer. And yeah, I don't know a ton about it. I remember going on to Amazon last year and looking at the deals and saying to myself, this is not really all that exciting. But I know they try to up their game every year, and so I'll take a look again, and I probably won't buy anything, but hey, that's just me.
Well, you and I were doing a little math before the show, and while you didn't buy anything, and I honestly can't remember if I did or not, I buy so much stuff on Amazon every week.
Right.
Anyways. I mean, you don't even need to have a Prime Day. It's basically now so easy to buy stuff on Amazon, and I'm in there every week. But last year, Joe, they did about $10 billion in revenue, and you and I were just trying to do the math on it. We're like, okay, well, they do about 110 billion per quarter. And a quarter has about 90 days in it, so that's a little over a
little over $1 billion a day.
And they did 10 billion over the 2-day period last year, and projections are for them to smash that number. So I don't know. I think it does kind of like with Apple does its releases of new devices. There is this follow through that you tend to get of excitement that translates to upside for the stock. Yep. So I'm looking at this chart, Joe, and I see, again, coming up at the top of that, it's going to test that April high of 3554. So 3,554. Remember, most investors can buy fractional shares. So
thank goodness.
Don't be scared off by the fact that that's a $3,554 print. You'll see we're coming back up on that, Joe. You can see here as we're bouncing around the 200-day moving average, the sell day volume was really far below average. There was one day where it touched it, but otherwise not much going on as far as get me out of the stock. And then sure enough, as we've accelerated back up the right-hand side of this cup, we've got volume that's above average on the buy days. So this is a good setup. And I think it has a very good shot of taking out the top end of this channel, that 3,500 area. And if so, we could see an extended run in this thing. So if you don't own Amazon yet and you've been looking for an opportunity maybe to add it to the portfolio, perhaps looking for a down day at some point here over the coming weeks would be wise. So that's another one from the smattering list today. Over to J2 Global, JCOM, JCOM is the next symbol I wanted to show. And Joe, there's a couple things that jump right out to me on this chart. And you've heard me go through this so many times when we do our weekly smattering. What do you think I'm going to say?
Well, I noticed a couple of things. I noticed that little cup with handle setup there not terribly long ago. We're a little past it now. It's not the greatest looking cup with handle I've ever seen, but that's pretty good. The thing that really stands out to me is just how consistently this stock has traded above its averages.
Yeah,
is that what you were thinking of as well?
It's one of them. Yeah, I mean, if you look at one of the things with great stocks is they tend to hug that 21-day moving average.
Yep.
And you can see that since last November, when it first really spiked and broke out, every time it's pulled back, it's gone underneath it a little bit, but not dramatically, and it's recovered it. And then it's either undercut it slightly, but not horribly, and then rallied back above it and continued to march higher. The other thing I just wanted to highlight, Joe, is just this buy day volume. I mean, we got like, if you look at the last 5 days, we've got 2 huge, humongous buy volume days. No energy on the sell days really in the past 2 weeks. And really, you could go all the way back, I think, to mid-April with this 5.3 million volume up day and say, yeah, someone has been in there regularly accumulating and adding shares. This isn't a grandma individual investor buying. This is an institution who's regularly coming in here and spiking and bidding it up. 20% year over year growth to 398 million in the March quarter, 8% growth in EPS in 2022 to $10.18. So it's actually, it's not horribly expensive. I mean, it's trading about 13 times 2022 earnings. So I think this is a really interesting stock. And I think if you get a down day, again, anywhere in that 3 to 5% down day, go ahead and take a swing at and see what happens. Next up, PROS or Pros Holdings Inc. This also falls into the technology camp for us.
Listeners, symbol there is PRO without the S, just to know.
Good point. Yeah, thank you. Yeah, PRO is the symbol. So the company is PROS, which is Pros Holdings, and then the symbol PRO. Pricing and margin optimization software for manufacturing, distribution, services, and travel industry. So again, if you're going to be spending money on shipping, if you're going to be spending money on business travel or whatever, you're probably going to want to do it intelligently. And this company has tools that help you spend less money and doing the things that you need to do to manage your business. It's high scoring in our research, free trial below. It's high scoring in our research. Revenue, really not that exciting, down 7% year over year to 61 million. But again, you are talking about COVID headwinds over the past year that may have impacted demand for its services. And this could be one of those scenarios, one of these stocks that as business starts to get back to business as usual, we start to see a return of that earnings growth. So PRO is a symbol that I think you should add to your watch list. Workiva, symbol there is WK. Workiva Inc. develops software that enables enterprises to collaboratively collect and manage, and then it drops off at the end of the description, but it's billing. It basically helps you manage. Let's go to their website. Simplifies complex work.
Isn't that every SaaS website ever?
You need. Teammates, data sets, data sources. Yeah, okay. Get more done with everyone. Truth and truth data. This is the one. Yeah, so this is telling me not a heck of a lot of software stuff, but I do see this as being really interesting. So SEC reporting. Okay, so no, what this company does is it helps automate your regulatory relationships. So it helps you with your accounting and your SEC filing, and you're communicating with your shareholders if you're an asset manager. So that makes sense. The market's been really big. There's a lot of money that's flowing into the markets. You've got a lot of companies that are IPOing, a lot more filings that have to be made with the SEC, and this helps to simplify that whole process. Revenue up 21% year over year in the March quarter to 104 million. This company is profitable, expected to earn 2 cents next year. So not greatly profitable, but profitable nonetheless. And you're forming this big saucer, right? Or cup. You've got a prior high back in February around 115, fell back to about 80, and now re-exerting and climbing up the right side. So Workiva, symbol WK. Next up is Bill. This is the one that helps you with managing your invoices. Bill.com Holdings, cloud-based software simplifying and automating back office financials. Revenue up 45% year over year to just shy of 60 million in the March quarter. Losing money still, so we are aware of that. But again, a lot of these companies that make life easier, so business to business, managing kind of like these paper trails and file cabinets, moving from one desk to another. A lot of these, kind of software solutions providers are re-exerting. And this is one that caught my eye. Greater volume on the up days, not a lot of energy to sell, low volume on the down days. The last three, Joe, are going to be names that are going to be more familiar to people. First up, Microsoft. So kind of in the same camp, not as big, not as long of a base, if you will, but it has been forming multiple channels. And, Microsoft, 19% revenue growth in the first quarter, year over year, growing its top line and its bottom line grew 35%, expected to grow 35% in 2021. And this is a company that's got its fingers in all the right spots, Joe, right? I mean, it's got the gaming aspect with
Huge
Xbox.
gaming arm that is rapidly growing. Yeah.
Yeah, it's got the cloud data services. So, all these businesses that are moving to the cloud have to store their information somewhere. And Microsoft is one of the bigger ones that provides those services. It's got the business office software suite, right? And Office 365, creating that nice recurring revenue stream. So, Microsoft is definitely a stock that I've had in my portfolio. It's one of my forever stocks. I believe it's a good core holding to have to get you, the gaming and the business and the personal exposure. So I think that this stock set up, say 263 was the prior high in April. And we're at 261 now. If we can close above that 263.20, I'd buy it the next day if it comes down. So if it falls the day after it breaks out, I would buy it. In the same vein as Amazon, Shopify. Shopify has been an absolute beast the last 2 weeks. Held its 200-day moving average. It violated very, very briefly, both in March and May. Recovered. That's why I don't, technicals influence my buys and my sells, but we don't start punishing in our scores until the stock is trading 5% or more below the 200-day moving average. So picture like a banjo around, not like a banjo like you'd play, but a band that goes along each side of the 200-day moving average. And then consider in between there to be kind of like this noisy period where you don't want to make any stupid decisions. You want to wait for it to either explode upward again or break down. And in this case, it exploded higher again. So again, sort of similar to what we've seen in some of these other charts. Prior high in February was about 1,500. Looks like we're going to challenge that 1,500. If it breaks out above 1,500 and then pulls back, that's when I would be looking to buy that one. And then finally, Atlassian Corp, simple there is TEAM, and they do collaboration software with an IT focus. So if you're talking about IT projects, a lot of people rely on their different platforms to be able to coordinate their activities, especially since so many IT professionals work in very different places. Some people may be in India and other people may be over in Asia, and some people may be in Latin America and other people here in the US. And, a similar setup. I mean, we do have a W bottom and then we have a double bottom in this one, but you could also say that this is a big saucer. And the only thing that's probably a little bit different about this one is it has already broken out above its February high, where the other ones that we were looking at are challenging those February highs. This one, as of today, is trading at 267, and the February high was 262. Revenue was up 38% year over year in the March quarter, and it looks like we could get double-digit EPS growth this year and high single-digit EPS growth next year. So where I was saying before, Joe, with kind of those ones that were flirting with breaking out over that prior high, and I wanted to wait for a down day, this is now maybe one step more advanced with that, where I would say, okay, it broke out, right? So now I am going to be watching for that down day. I happen to already own it. I'm long it, so I'm not going to be buying more of it. But if I didn't own it, I would be now looking to see if it pulls back towards that low 260 area and just grab it on a down day and see what happens.
Yeah, so, if history tells us anything, that very well might happen on Monday.
Mondays are usually the weakest day of the week. Don't sell on a Monday is savvy advice that Stock Traders Almanac has talked about in the past. So yeah, if you get a down day on Monday, put that to your advantage and think about picking up some Atlassian shares.
All right. Is that 11? I haven't really been counting.
I know. I know, right? I'm trying to keep it somewhere around that 10 mark. Some weeks will be a little bit lower, and some weeks might be a little bit higher. But yeah, that was 11 for today. And
All
plus a
right,
bonus,
awesome.
right? We threw the
Plus the
bonus in
bonus,
there.
so it's actually 12 if you throw in, yeah, if you throw in Bark. Yeah, so that's all we've got for you. Yeah, with that, I think we'll wrap it up. Any final words, Todd?
No, stay safe out there.
Yeah,
Enjoy
stay safe,
summer.
everybody. Everyone have a fathers out there. Have a happy Father's Day, especially to you, Todd.
Thank you
And
very much.
yes, and we'll talk to you all next week.